Ever imagine owning a piece of, like, a Mumbai skyscraper
Uh,
or one in Bangalore, without needing millions of dollars?
well, that's the kind of thing that India's REIT market is making possible, and we're going deep today.
Yeah, we're looking at this CRISIL report, trying to understand just what makes REITs so exciting.
And what's interesting is REITs, those are real estate investment trusts. They've been around globally for a while now. But in India, they're pretty new.
So it's almost like we've got this treasure map and we're trying to see, is there real gold at the end of it?
Exactly.
Okay, so for those who haven't really encountered REITs before, can we break it down? What are they and why all the buzz?
So think of REITs like mutual funds. But instead of stocks and bonds, you're investing in real estate,
Okay.
the kind that brings in income office buildings, malls, even hotels. It means you don't need to buy the whole property to profit from it.
So instead of needing like a king's ransom to invest in real estate, you can get in on the ground floor, literally, with a much smaller investment. That's what they mean by democratizing access, yeah.
Exactly. And it's not just about individual investors getting a slice. REITs also give developers and private equity firms, the folks who build and own these massive properties, a way to unlock capital, the capital that's tied up in their portfolios.
Ah, okay. So it's a win-win for both sides then. Investors get access to this market that's typically pretty exclusive, and developers get, a cash infusion to fuel new projects.
Exactly.
Yeah.
For investors, REITs offer steady returns through these mandatory dividend payouts. So in India, REITs actually have to distribute at least 90% of their net distributable income to investors.
Wow.
Plus, there's the potential for, capital appreciation if the property values go up.
Okay, so you're getting a piece of the rental income and potentially benefiting from property value increases. That sounds pretty sweet.
It is.
But what's the incentive for developers, though, to give up a chunk of their potential profits?
It's not really about giving up profits. It's more like strategic financial maneuvering. Think of it this way. A developer has an amazing portfolio of office buildings, but all their capital is locked up in those assets.
Right.
A REIT lets them sort of monetize those properties without having to sell them outright.
Ah, so it's like hitting the cash out button, but still staying in the game. And this can even boost their credit rating.
It can.
I think the report mentioned the Embassy Office Park REIT as an example.
Yeah, that was India's first REIT, launched back in 2019. Their credit rating went from, well, a decent level to CRISIL A-stable after listing. That's like the highest possible rating.
Wow.
Makes it way easier to secure financing for their future projects.
So going the REIT route is like a financial glow up for developers, basically.
We could say that.
Makes sense why more might be considering it. But even without REITs, the report points out that India's commercial real estate market is already booming.
Oh, absolutely. We're seeing low vacancy rates, especially in grade A office spaces, premium buildings with great facilities and amenities.
Right.
This strong demand is driving consistent rental income growth. The report actually projects that lease rentals could rise by 5 to 10% annually over the next few years.
Whoa. So you've got a hot market with strong growth potential, and REITs come along offering a way to inject even more capital, fuel further expansion.
Yeah,
Sounds like a recipe for some serious success.
it does. And to really get a sense of just how big this could become, it helps to look at more mature REIT markets like, say, the US, Singapore, Japan.
Yeah, let's do some global benchmarking. How do those markets stack up?
Well, in the U.S., REITs are huge.
Right.
I mean, they make up a whopping 96% of the real estate industry's market cap.
Wow.
Singapore and Japan aren't too far behind. REITs represent nearly 50% of their respective real estate market caps.
Wow, those numbers are pretty mind-blowing. India seems to be just scratching the surface then.
It seems so.
But hold on, the report also throws in a cautionary tale, right? Something about Hong Kong.
Right. Hong Kong introduced REITs around the same time as Singapore and Japan, but their market has remained relatively small.
Okay, this is where it gets interesting. What happened in Hong Kong? Why didn't they see the same kind of REIT boom?
Well, the report suggests it was a lack of government incentives and a less than supportive regulatory environment. Essentially, without the right policies, REITs just struggled to gain traction.
So even the best ideas need the right conditions to flourish. It really highlights the importance of getting that regulatory framework right. Now, bringing it back to India, I understand launching the first REIT here wasn't a walk in the park either.
It wasn't. It took nearly 5 years and a whole series of regulatory amendments to get the ball rolling. SEBI, India's securities regulator, had to, tweak their rules to make REITs more attractive to developers, but also safeguarding investor interests at the same time.
Okay, let's unpack those early challenges and how SEBI ultimately paved the way for that first Indian REIT.
Sure. Initially, the regulations were very restrictive.
Hmm.
REITs could only invest a small percentage in projects that were under construction. They couldn't raise debt securities as easily. And they were limited in the types of properties they could hold. Things like hotels and hospitals were excluded.
Hmm.
Plus, sponsors had to hold a large percentage of the REIT, making it less appealing for some.
So it sounds like a classic case of too much red tape stifling innovation. But then SEBI stepped in and started making changes.
Exactly. They gradually eased those restrictions, allowing REITs to invest a larger portion in under-construction projects, tap into debt markets, and diversify their portfolios with hotels and hospitals. They also adjusted the rules around sponsor holdings to make it more attractive for developers to launch REITs.
Ah, so it was a process of fine-tuning those regulations to strike that balance between attracting developers and also protecting investors.
Right.
And those changes were key to the launch of the Embassy Office Park REIT.
Absolutely. Without those amendments, it's unlikely that India would have seen its first REIT when it did.
We're back and diving even deeper into India's REIT potential. I gotta say, the more we uncover, the more intrigued I become.
Well, it's understandable. The CRISIL report makes a pretty compelling case, suggesting that REITs could unlock a huge amount of value in the Indian real estate market, that is.
Yeah, they even put a number on it, right? Something like what was it, a Roma's 1.5 lakh crore opportunity. Can
I
you
think,
put that in perspective for those of us who aren't, fluent in Indian currency?
sure, that's roughly about 200 billion US dollars.
Wow.
And that's just based on potential REIT listings from the top 10 commercial real estate players in India.
Okay.
CRISIL's analysis suggests these developers alone could monetize something like 184 million square feet of prime office space through REITs, of course.
Okay, now that's a number that gets my attention. But what does that actually mean for, individual investors like me? How do I stand to benefit from this potential REIT boom?
Well, it all goes back to that concept of democratization we talked about earlier. REITs lower the barrier to entry for real estate investment.
Mhm.
You no longer need to be like a high net worth individual or a large institution to own a piece of a skyscraper or a shopping mall, for example.
So instead of needing millions, I could potentially invest what, a few thousand rupees
Yeah.
and start earning dividends from prime commercial properties? That's pretty appealing.
Exactly. REITs offer a way to diversify your portfolio with an asset class that's, well, historically been out of reach for many individual investors. And of course, we can't forget about the potential for capital appreciation. If those property values go up, your investment could really grow significantly over time.
And how do I know I'm not just throwing my money into a black hole here? Are there regulations in place to protect investors in REITs?
Oh, absolutely. SEBI, India's securities regulator, has this really comprehensive framework. It's designed to ensure transparency and accountability within the REIT market. There are very strict guidelines around disclosures. They have to be mandatory. There are also independent trustees that oversee operations and limits on how much debt a REIT can take on.
So it's not like the Wild West out there. There are rules in place to safeguard investor interests.
Right.
That definitely makes me feel a bit more comfortable. But tell me, are all REITs created equal? What should I be looking for when I'm evaluating potential investment opportunities?
That's a great question. And you're right, not all REITs are the same. They differ in their portfolio composition, their risk profile, their potential for returns. One really key factor to think about is the type of properties the REIT holds.
So it's not just office buildings anymore.
Not at all. The CRISIL report highlights this growing diversity within the Indian REIT market.
Okay.
We're seeing REITs that include hotels, shopping malls, industrial warehouses,
Oh,
even solar parks.
that's interesting. So there's a REIT out there for every investor's taste, whether you're bullish on office space or retail or even renewable energy.
Exactly.
But tell me, what about the risk side of the equation? What are some potential red flags that investors should be aware of?
One thing to watch out for are high vacancy rates. Within a REIT's portfolio, that is, if a big chunk of their properties are just sitting empty, well, that can really impact their rental income and ultimately, affect your returns.
Makes sense. Nobody wants to invest in a ghost town. What else should I be paying attention to?
The quality and location of the properties are crucial. Grade A properties in, those prime locations, they tend to command higher rents and attract much more stable tenants, which ultimately leads to, more consistent returns for investors.
Okay, so location, location, location.
Okay.
Applies to REITs just like any other real estate investment.
It does.
But with all the potential upsides we've talked about, there must be some downsides too, right? The CRISIL report wasn't all sunshine and rainbows.
You're absolutely right. The report does acknowledge there are challenges and risks associated with investing in Indian REITs.
Yeah.
One key concern they highlight is the fragmented and often opaque nature of the Indian real estate market.
Right. We touched on this a little bit earlier, but can you elaborate on how that lack of transparency could impact REIT investments?
Sure. So in many developed markets, you have these readily accessible and reliable property records. But in India, things can get a bit more complicated.
Yeah.
Property ownership information might be incomplete, outdated, or even disputed.
Mm.
This makes it harder for REITs to, accurately assess property values and can sometimes lead to some unexpected issues down the line.
So it's a bit of a due diligence nightmare. Investors really need to do their homework and make sure they understand what they're getting into.
Absolutely. Thorough research is absolutely crucial.
Okay.
Another challenge highlighted in the report is the relatively high level of compliance and regulatory requirements for REITs in India.
Right. We talked about SEBI's efforts to streamline those regulations, but it sounds like there's still some room for improvement.
There is. The process of setting up and managing a REIT in India, it can still be pretty complex and costly, especially for smaller developers.
Okay.
This can actually deter some players from even entering the market.
Hmm.
Ultimately, it limits the growth of the REIT sector.
So for developers who might benefit the most from a REIT's capital infusion, the hurdles to entry can be pretty high.
They can, and that's a concern.
It's a bit of a catch-22 then. The developers who could benefit the most from REITs are often the ones who find it hardest to jump through all the hoops.
Exactly.
Hmm.
And actually, the CRISIL report also points out a rather interesting limitation. Currently, banks and insurance companies, who are typically major players in real estate investment, have limited access to the REIT market in India.
Wait, really? That's surprising. Why would they be excluded?
Well, it comes down to regulatory restrictions that prevent them from investing as freely in REITs as they might in other real estate assets.
So yet another example of regulation potentially holding back the market's growth.
That's one way to look at it. Yeah, this limited access from those institutional investors, it can impact liquidity and, hinder the development of a more vibrant REIT ecosystem.
Okay, so we've got these challenges. Transparency issues, complex regulations, limited access for certain investors. It sounds like a pretty daunting landscape. Is there any reason for optimism amidst all these hurdles?
Absolutely. Despite these challenges, the CRISIL report remains optimistic about the long-term prospects of the Indian REIT market. I mean, remember, we're still in the early innings here.
So you're saying there's still plenty of room for growth and improvement.
Exactly. The success of the Embassy Office Park REIT and other early entrants has demonstrated that REITs can work in India. And as the market matures, we can expect to see some of those, regulatory kinks getting ironed out and more institutional investors enter the market.
It's like anything new. It takes time to kind of find its footing and reach its full potential.
Precisely. And let's not forget about the underlying strength of the Indian economy. As the economy continues to grow, so too will the demand for commercial real estate, which ultimately bodes well for the REIT market.
So for investors with a long-term perspective and a bit of patience, Indian REITs could be a very, very interesting opportunity.
I agree. It's about recognizing the potential while being, mindful of those risks.
Well, we've covered a lot of ground so far in this deep dive, from the basics of REITs to the intricacies of the Indian market. If you had to distill it all down to one key takeaway for our listeners, what would it be?
I'd say India's REIT market is exciting. It has the potential to generate some really significant returns for investors. But it's crucial to approach it with a discerning eye. Do your research, understand the risks, and the specific, dynamics of the Indian market, and of course, choose your investments carefully.
Sound advice. And remember, every investment decision comes with its own set of risks and rewards. There's no one-size-fits-all answer. The best approach is to stay informed, do your homework, and invest in a way that aligns with your own individual financial goals and risk tolerance.
Absolutely. Knowledge is power, especially when it comes to, navigating investments.
Well, that wraps up part 2 of our deep dive into India's REIT opportunity. We'll be back with part 3 after a short break. Welcome back. So we've seen the potential, heard about the success stories, and now it's time to face those lingering concerns. Head on,
Yeah, it's like any good treasure hunt. You followed all the clues, gotten a glimpse of the prize,
right?
but now you have to navigate those final obstacles to claim your reward.
Exactly. And the CRISIL report, it doesn't shy away from highlighting those hurdles. One phrase that really stuck with me was fragmented and opaque. That was their description of India's real estate market. What makes it so tricky, and why does it matter for REITs?
Well, imagine you're trying to invest in a company, but their financial records are all scattered, incomplete, potentially unreliable. That's kind of what it's like navigating real estate in India, sometimes.
Okay, so that sounds like a headache for anyone, let alone someone trying to manage, a multi-million-dollar REIT portfolio.
Exactly. REITs really rely on accurate property valuations
Yeah.
and clear ownership titles. But in India, land records can be, well, messy.
Okay.
You might encounter incomplete documentation, outdated information, or even boundary disputes.
So it's not just about finding, a great property. It's about verifying all those details, making sure there are no hidden surprises lurking in the paperwork.
Exactly. And this lack of transparency, it can make it really difficult for REITs to really assess the true value of potential acquisitions,
Yeah.
and can sometimes lead to these, unexpected legal challenges down the road.
It's like that old saying, buyer beware. But surely there are ways to mitigate these risks, right? REIT managers aren't just, blindly throwing darts at a map.
Of course not. Reputable REIT managers have these really robust due diligence processes in place. They'll work with legal experts, property consultants, to verify ownership, assess those valuations, and uncover any potential red flags.
So it's not a deal breaker, but it definitely adds a layer of complexity that investors need to be aware of.
Absolutely. And this brings us to another challenge, the regulatory landscape. In India, that is.
Right, right. We've talked about, SEBI's efforts to streamline the rules, attract more players to the REIT market, but it sounds like there's still a fair amount of red tape involved.
There is. Setting up and managing a REIT in India, it can still be pretty complex and costly, especially for those smaller developers. The compliance requirements, they're really stringent, and the paperwork can be, well, overwhelming.
So for developers who might benefit the most from a REIT's capital infusion, the hurdles to entry can be pretty high.
They can be, and
Yeah.
and that's a concern. This complexity, it can actually limit the growth of the whole REIT market because smaller players might be deterred from entering the game.
Right. It's a bit of a catch-22 then. The developers who could benefit the most from REITs are often the ones who find it hardest to jump through all the hoops.
Precisely. And the CRISIL report also highlights a rather interesting limitation. Currently, banks and insurance companies, who are typically major players in real estate investment, well, they have limited access to the REIT market. In India, that is.
Wait, really? That's surprising. Why would they be excluded?
Well, it boils down to regulatory restrictions that prevent them from investing as freely in REITs as they might in other, real estate assets.
So yet another example of regulation potentially, holding back the market's growth.
That's one way to look at it, yeah. This limited access from these institutional investors, well, it can impact liquidity, and it can hinder the development of, a more vibrant REIT ecosystem.
Okay, so we've got these challenges: transparency issues, complex regulations, limited access for certain investors. It sounds like a pretty daunting landscape. Is there any reason for optimism amidst all these hurdles?
Absolutely. Despite all these challenges, the CRISIL report remains optimistic about the long-term prospects of the Indian REIT market, that is. Remember, we're still in the early innings here.
So you're saying there's still plenty of room for growth and improvement.
Exactly. The success of the Embassy Office Park REIT and other early entrants has demonstrated that REITs can work in India. And as the market matures, we can expect to see some of those, regulatory kinks ironed out and more institutional investors, entering the fray.
It's like anything new, right? It takes time to kind of find its footing and reach its full potential.
Precisely. And let's not forget the underlying strength of the Indian economy. As the economy continues to grow, so too will the demand for commercial real estate, which ultimately bodes well for the REIT market.
So for investors with a long-term perspective and a bit of patience, Indian REITs could be a very, very interesting opportunity.
I agree. It's about recognizing the potential while being, mindful of those risks.
Well, we've covered a lot of ground in this deep dive, from the basics of REITs to the intricacies of the Indian market. If you had to distill it all down to one key takeaway for our listeners, what would it be?
I'd say that India's REIT market is an exciting space with the potential to generate some really significant returns for investors. However, it's crucial to approach it, with a discerning eye. Do your research, understand those risks and the specific dynamics of the Indian market. And of course, choose your investments carefully.
Sound advice. And remember, every investment decision comes with its own set of risks and rewards. There's no one size fits all answer. The best approach is to stay informed. Do your homework and invest in a way that aligns with your individual financial goals and risk tolerance.
Absolutely. Knowledge is power, especially when it comes to navigating, the world of investments.
Well, that wraps up our deep dive into India's REIT opportunity. We hope this exploration has given you a clearer understanding of what REITs are, how they work, and the potential they hold for investors in India.
As always, we encourage you to continue your own, research and exploration. The world of finance is constantly evolving, and there's always something new to learn.
Thanks for joining us on this deep dive. Until next time, keep exploring, keep learning, and keep diving deep into the world of knowledge.